Okay, one more earnings to take a look at. Puneet Dalmia is Managing Director of Dalmia Cements. He joins us on the line from Delhi for a boardroom. Puneet, thanks very much for joining us. Before I get into the nitty-gritty of numbers, I just needed to ask you 2 points. One, I believe you have about 44 or 45% of OCL India. Could we expect that within this fiscal or next fiscal you'll consolidate this company, because then you can pick up the earnings directly rather than perhaps picking up whatever the dividends are? How would this pan out, the OCL India?
I think we are consolidating accounts on an associate basis right now. And if I look at the first 9 months, assuming we had a 45% stake, it would give us a 50 crore addition to our net profit, which will add about 6 rupees to our EPS on a 9-month basis.
Right.
So I think overall we see this move as a decisive step in becoming a pan-India player. And this gives us footprint in 2 regions now, South and East.
Puneet, could you also just walk us through at what capacity the OCL plants and the Dalmia plants cement plants have been operating at, and how much of a change in unit pricing on an average per ton have you seen from, let's say, last quarter and perhaps the same quarter last year?
If I look at the total capacity of both the companies, Dalmia Cement has about 9 million tons. Which has just been commissioned. OCL has about 5 million tons. So the total group capacity is about 14 million tons. In terms of pricing, we have seen stable pricing environment in the southern region for 9 months. So it's pricing is almost flat. But if I look at the eastern region, prices has actually gone up about 5% from last year. However, if I look at on a quarter-on-quarter basis, in Q3 the pricing in South India came down by about 20%. But in the January month, it has recovered by 10%. So the net decline in prices in the southern region has been about 10% recently.
That's quarter on quarter?
Yeah.
Okay. Fundraising plans, any? One understood that you were close to raising around $200 million.
Yeah. As I said, we are in talks with private equity players, and we should hopefully be able to make an announcement this quarter.
Okay, so the promoters, the company issues new shares?
No, this is an interstate transfer.
No, when you, if you want to raise money, is the company issuing new shares to a private equity investor?
Yes, that will be a, expansion in our capital.
What kind of dilution are you looking at?
I think it depends on the pricing that we get and the vehicle that we raise capital. Because we are planning to raise capital in our subsidiary, Dalmia Cement Ventures Limited, which is an unlisted subsidiary, which is going for a 10 million ton expansion. So I think I can talk about pricing, etc. at that stage when we are close to commenting on the deal.
Give me an idea how you look at prices this quarter and the next in the south, as also how do you look at capacity utilization?
In this quarter, I think this is supposed to be a good quarter from a demand perspective. February and March are very strong months in terms of demand. Q3 was the monsoon month in the southern region, therefore prices were weak. We think prices will be stable and they might gain a little bit in February and March from the present levels. But if I look at a 1-year outlook, my 1-year outlook is more cautious. I think new capacities are coming on stream, and the total capacity utilization of the industry will drop down from 90% presently to about 80%. And this is likely to put pressure on prices. But if demand continues to grow, I think prices may be less volatile than we imagine.
You did 19 rupees as EPS, 19.5 I think last year. You're well on the course to improving upon that, going by your earnings in the last this and the previous quarter. What do you think you'll do by way of earnings this year, FY10 and FY11?
I think we don't give a guidance on earnings forecasts as a policy, but we have seen that in this the first 9 months our top line has grown by about 25%, and our EBITDA and PAT have grown by 18%. So I think company is growing 20-25% a year. But if I look at our cement business, most of the capacities have gotten commissioned in the second or third quarter, and they're still in the process of ramping up. So volume growth will happen next year, and I think earnings should improve.
All right. Puneet,
I'll just take one small question. Puneet, I just wanted to ask you, you brought up some very interesting points, because, we in cement, we can pretty much multiply capacity or utilization of capacity with price and get, what your earnings will be. Let's say 2 quarters from today, 3 quarters from today, when do you think is the inflection point where, supply is outstripping demand and perhaps pricing is not that simple? When does that uncertain feature come in, and how much more capacity will you have by that point, even by brownfield standards?
I think that position, Ashu, is between 18 to 24 months away. And if you look at the next, 18 to 24 months, we will have a period of surplus capacity in the industry. So I think on pricing, we have to be cautious. But if demand grows, pricing may be more stable than what, I'm forecasting. But we have seen that in Q3, prices went down by almost 20%. So they have recovered 10% from there. But I think my outlook on prices is much more cautious than most people.
All right. Puneet Dalmia, thank you very much for joining us. We have gone on for a bit too long. We have